Let's talk individual stocks then. Rudra, what's on your list?
See, for me, private banks will continue doing good and use all dips in private banks to buy. And it's a matter of choice whether you want to pick up ICICI Bank or HDFC or for that matter Kotak Bank. So for me, I have chosen ICICI Bank and one can definitely accumulate it. Strong support at levels closer to 1400. Risk reward is very favorable. One of the only large cap stocks where the results were fabulous. You can't ask for something better than this, both fundamentally and technically. So buy ICICI Bank, look at targets of 1460 to 1500 with a stop loss of 1410. The second stock for me, which looks very strong from insurance sector, is Bajaj Finserv. Bajaj Finserv looks very, very strong. Clear accumulation pattern is seen with huge delivery volumes going up and prices also very, very supportive. Look at initial targets of 2120 to 2150 to come on Bajaj Finserv, and one can have a stop loss of 2020 for this. So buy on ICICI Bank and Bajaj Finserv, very positive on financials.
Okay, Kunal, what's on your stock list?
So I'll go with the one Bharat Forge. That's a chart which is looking attractive or start to look attractive. The stock back again above the 50 DMA, trading above the 1100 mark. So 1144 as a near-term target. Stop loss could be kept at 1094. And the other stock is United Spirits. And in fact, many of the liquor stocks are actually coming back towards a breakout of the previous 3-month high. Some of them are at closer to the 52-week highs. So that's a very interesting sector to look out for. Many of the stocks are starting to trend and showing signs of consistent up move. United Spirits is what I would suggest as a buy. Targets of 1620, stop us at 1520.
Okay, let's take a very quick break on that note. The implied open for the Nifty, absolutely flat as up, but we're not complaining. Some amount of consolidation should definitely be good, considering this is also a truncated week. But also hear it out from Dinsho Irani from Helios Mutual Fund. He's cautious still on the market and thinks that the valuations are looking stretched.
We have our comfort zones. I mean, one big comfort zone for us has always been the BFSI space as such. And you've seen the results out there. If anything, they've been fairly, I mean, apart from the microfinance and some of the NBFCs reporting disappointing numbers. But I think the bulk of the reportage from that particular segment has been fairly strong. I think that's one area that we were very comfortable with. Hotel sector, the hospitality sector, I think that is going to be a surprise, because if you look at if you're tracking that sector on the ARR basis and on the ARPOB basis, they've been fairly exciting. I mean, the numbers are fairly high YOY also. Having talked about hospitality, let's talk about the healthcare sector. Again, that's another area where we're comfortable with. I think that's going to report very good numbers going forward. So I think these are the specific areas that we are comfortable with, and I think that's where we're trying to park our money, given that the way the world is today.